Hi, I'm Pat Keown, a Senior Research Analyst with Lipper, and I'm here to speak to you about the fund flows activity for the week ended Wednesday, March 13th. We'll start this week's report by taking a quick look at the market activity for the week. All the major equity indices recorded positive returns for the week, paced by the NASDAQ Composite, which was up by 1.83%, followed by the S&P 500 and the Dow Jones Industrial Average, which were up 1.4% and 0.1% respectively. The indices got off to a bit of a sluggish start for the week, thanks to some weak job numbers that were released on Friday. But things started to take a turn for the better over the weekend, starting with Federal Reserve Chairman Jerome Powell's interview on 60 Minutes, in which he put a positive spin on the current state of the U.S. economy. This interview, coupled along with some strong economic data from some key stats, as well as some tame inflation data, gave the markets the tailwinds they needed to finish the week on a high note. Let's turn our attention now back to the fund flows activity for the week. We'll start by taking a look at our macro groups. We saw equity mutual funds had net outflows of $3.4 billion. Taxable bond funds took in about $585 million in net new money. Muni bond funds also had net inflows to about $1.2 billion, and money market funds saw $2.2 billion leave their coffers. We'll take a closer look at each one of the asset groups now and break it down a little bit further for you. We'll start by looking at our equity mutual fund group. As I just stated, they had net outflows of $3.4 billion for the week. It was their fourth straight weekly net outflow. Taking a little bit more granular look, this week non-domestic equity funds were responsible for most of the net outflows with $1.9 billion, while domestic equity funds also contributed $1.5 billion to the losses for the week. Taking a look at the peer group level, we see that global equity income funds had net outflows of $963 million, and small cap core funds had $246 million leave their coffers. We will move on to our next group now, which is equity ETFs. This group had net inflows last week, roughly $4.3 billion in net new money came in. The lion's share of this all was the result of the iShares Core S&P 500 ETF, which had net inflows of $4 billion. This was followed by the iShares Core MSCI EFA ETF, which took in just shy of $900 million for the week. Conversely, we saw the SPDR S&P 500 have net outflows of $2.9 billion for the week. We'll move on to our taxable bond fund groups now, starting with mutual funds. They took in $585 million in net new money last week. It was their ninth straight weekly net inflow. Ultra-short obligation funds was the largest contributor last week with net inflows of $1 billion. This was their ninth straight net inflow. In 52 out of the last 53 weeks, they've had net inflows for a total of $46.5 billion in net new money coming into their coffers. Second on the list last week was Core Plus bond funds with net inflows of $968 million. Moving on, we'll look at our taxable bond ETF group now. This group also had net inflows last week of just about $2 billion. Major contributors were the SPDR Bloomberg Barclays High Yield product, which had net inflows of $800 million, followed by the iShares 1 to 3 year Treasury bond ETF, which had net inflows just shy of $700 million, while the iShares 20 plus Treasury bond product saw roughly $600 million leave their coffers. Our next asset group to look at now is Muni Bond funds. Another net inflow streak here was a 10th straight net inflow, as they took in $1.23 billion in net new money. This was driven by high yield munis and intermediate muni debt munis, which saw roughly $353 million and $350 million in net new money come in. Our last group to take a look at is money market funds. Net outflows for this group last week, about $2.2 billion. Major contributors to these net outflows were institutional U.S. government money market funds and institutional money market funds, which had net outflows of roughly $5 billion and $1.6 billion respectively, while on the flip side, the institutional U.S. Treasury money market peer group took in $3.8 billion in net new money. Well, that wraps up this week's report. If you'd like to take a closer look at the data for yourself, please join us at our website, which is www.lipperusfundflows.com. And please join us here again next week, where another one of our analysts will be speaking about the week's fund flows activity.